Liza, when you think about these meetings that are ahead of us, what can change?
Thank you so much, Sonali, for having me on today. So I think the administration's expectations for this meeting are relatively low. As the previous reporter mentioned, they're really trying to stabilize ties and make sure that there are open lines of communication to deal with these various tensions that are ongoing in the world. I think the administration would like to make sure that should something happen, should there be a contingency, they have someone to call in Beijing, someone that will reliably pick up the phone.
Now, how do things start to change when you think about China's economy and where it stands right now? Does this lessen the aggressive posturing between the two nations in terms of any potential to work together to advance economic initiatives?
So I think you bring up a great point. The mood music on the Chinese economy has really changed in the last several months. It used to be that we thought of the Chinese economy just as on a upward trajectory for a long time. And I think that really has changed and taken an about face. And now I think the global consensus is that China is past the era of miracle economic growth, and they're possibly caught in a middle income trap indefinitely, where they will never return to that rapid growth. However, I think one thing we have to keep in mind is that the Chinese economy is already quite large. It's the second largest economy in the world. So there's still a lot of resources they can bring to bear to develop their military and to pursue their technology ambitions. So they're not going to be too constrained on that side. I think where they will really kind of pare back is on the social services side.
Well, it's interesting because how do you think about the potential to invest from both countries? When you think about the United States and the existing financing needs, the Chinese economy and any potential slowdowns, where do you see the investments in future technology, artificial intelligence paying off more?
I think that's a really great point. In the last several years, the U.S. government has been caught with some unwelcome technology surprises where China was able to race ahead and get ahead of the United States on several important technologies like hypersonic missiles, EV batteries, 5G network hardware. And so really, I think we learned the lesson that we can't be complacent, that China is a determined rival and is willing to put a lot of resources behind its goals. And what has happened in the last year is you've seen that the AI revolution is really upon us. And so I think that's given us a shot in the arm in the United States, because most of the really great firms in the generative AI space that we're really excited about are U.S. firms. And so I think it shows that the U.S. can still innovate, we can still lead, but we can't take our lead for granted. We have to invest at home and do more to run faster.
Now, given you'd focus so much on strategy, look 10 years out now. When you think about how global the world has been and how interconnected the U.S. and China have been, does that need to be the case in the future?
So I think what we've seen over the last few years of experiencing Chinese economic coercion, where China's putting pressure on foreign businesses, pushing them out, and all of that, is that over the long term, we do need to reduce our exposure to China. We really should be trading and investing more with other democratic market economies, other economies that respect the rules and that want to trade fairly and that promote transparency and the rule of law. I think the track record of China over the last 20 years is that is not the direction they're heading. In fact, the opposite under Xi Jinping, where really they've made a choice to go in a different direction. So I think we really need to be reducing our exposure. And this doesn't mean cutting everything off, but I think we should, when it comes to strategic technologies and our investments and trade in those sectors, it really should be doing it more with other democracies.
When you think about President Biden's approach to China here and the initiatives already put in place to boost American competitiveness, what do you find to be the most effective?
So I think there's an emerging kind of two-pronged approach, promote and protect. So the promote side is this emerging American industrial strategy. You have massive investments in the semiconductor sector, as well as the Inflation Reduction Act, which puts a lot of domestic investment into renewable energy, EVs, and the like. And so that's all a really great start, and we need to be doing more of that and investing, spending more on research and development. That there's a lot of bang for the buck. If we invest in these things, they tend to pay off economically and also for our security and resilience. So I think we need to keep going in these areas.